Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for Tesla Incorporated, stock ticker TSLA. Here we can see that we're caught in a bit of a consolidation pattern with Tesla at the moment. We are trading at upper levels here, and there is some debate about where exactly the price pattern formations are signaling the potential for upside or downside here in coming trading sessions. So currently, what we're seeing, if we kind of move in here a bit, we can see that near-term price lows have been generated at 236.83. This is significant because we're seeing a bit of a bounce here in advance of this prior low, which came in at 233.08 and was posted on July 12th. So overall, we continue to kind of trend higher here a bit, and this is starting to look like a bit of a bull flag or a bull pennant pattern, which is a highly bullish pattern. We are starting to see some evidence of a price break here also to the top side. We can kind of redraw this line here. We have seen a bit of a spike above this downward sloping momentum trend here. But unfortunately, we have not seen it close above here on a 4-hour basis just yet. So this does suggest that we could still be within a consolidation period. The price moves have not been significantly higher here, and then there's the fact that we have not broken above prior resistance zones, which came in at 257.13. So for that reason, I'm not necessarily inclined to consider this to be a breakout just yet. We could be on the verge of that. But it could just as easily be a price failure here, and this price high could actually go far in sort of defining whether or not this bull flag or bull pennant pattern is actually unfolding here. So we would need to see a little bit more of a price movement overall in order to really call this a breakout. But it is clear at this point that we're sort of grinding into these levels, and the potential here for a topside break is increasing. So all of that said, you don't want to be premature just yet and start to enter into long positions because there are still some examples here of technical situations and technical indicators which do suggest that we could still be, we could still be experiencing a top at this point. One factor that I would point to would be this rising condition in the negative trading volumes that we've been seeing recently. Here, if we kind of just drill in here, we can see that the spikes higher in trading volumes have been more negative than positive. That is not to say that we have not seen positive trading volumes here. We can sort of see them kind of intermixed in here. So there are definitely periods where investors are moving in and buying in at the lows. But one kind of point of caution here would be the fact that if we were to see another major spike in trading volumes, recent history would suggest that these could be in the downside direction. So it's just another point to be watching here in the event that we do start to see a price failure and possibly a false breakout to the top side within this bear flag. Bull flag or bull pennant trading pattern. But overall, the outlook does still remain quite favorable. If we look at the indicator reading here, we can see that positive trading momentum has continued to build for quite a while, really since these lows developed all the way back in the second half of April when the share price fell to 138.80 before starting to move higher. So there were some positive signals here, and there was some evidence. There was some evidence that we would start to see these developments here going forward. And overall, this momentum trend has managed to maintain itself as we continue to move higher. So it's favorable at this point that we have not seen a break lower because we're starting to reach the midpoint of the histogram within that trend. So once you start to reach those levels, it becomes harder and harder to maintain. But so far, the stock has still managed to maintain that price trajectory. So that is another positive. To the downside, if we did start to prepare for a possible downside move here, the first level that I would be watching comes in at this 233 mark. And I am expecting to start seeing this rising orange line here start to move into this area relatively soon. We're not quite there yet. Currently, we're still below 230. This is 229.60 roughly in the 50 period exponential moving average. That's this orange line here. So we are moving into this area quite soon, though, and this could provide some extra support in this 233 area if we do start to see downward movements into that area. So overall, just keep in mind the fact that we have seen massive declines here in a very short period of time. And this does require a period of consolidation at the very least at the highs. So if you're bullish on this stock, this is not a reason to be concerned necessarily. I mean, even if we were to see some significant, some semi-significant breaks to the downside, it's still not a real reason to be, excessively concerned. Overall, this downtrend line has managed it has broken, and share prices have managed to sustain themselves well above this level. I mean, we're really forming a consolidation zone here at roughly 235 to 265 at the moment. So overall, that's kind of the trading range that I'm watching. It's still very possible that we are on the verge of a major breakout here. Given the fact that this still could be, a bull pennant or a bull flag pattern. We just want to watch some of these possible kind of negative developments here, especially in the trading volumes themselves. I mean, that would really be what would kind of concern me the most, because if we do start to see spikes here, recent history suggests that this is more likely to occur in the negative direction. As we can see overall, the trading volumes have started to diminish here. We can kind of point to this area here. There was a major spike in downside trading volumes, and then overall, the trading volumes started to kind of taper off and become more limited there going forward. So if we do start to see a major break there, this will be one very important area to watch in order to determine whether share prices can maintain themselves at these elevated levels. So here's the current market analysis for Tesla Incorporated, stock ticker TSLA.